Welcome to the LRF Group Real Estate Insights. I'm your host, bringing you the latest market intelligence from the front lines of South Florida real estate. Today, we are diving into our exclusive April 2026 Miami condominium absorption rate and new development report. If you've been following the headlines, you might think the Miami condo market is slowing down. But the reality on the ground is much more nuanced. Right now, we are seeing a distinct divergence, a tale of two markets between the resale segment and the pre-construction sector. Let's start with the resale market. As of the first quarter of 2026, the overall resale condominium inventory in Miami-Dade County has reached between 13.4 and 17 months of supply. This firmly places the existing condo segment into buyer's market territory. It's the highest level of resale inventory we've seen since 2019, driven by a combination of elevated listing activity and slower absorption of older stock. The pressure is particularly noticeable in the Central Business District, encompassing downtown Miami and Brick Hill, which currently faces approximately 24 months of supply in the resale segment. However, this macro-level data obscures a critical split in the market. When we look at the pre-construction sector, it's a completely different story. Developer-controlled supply remains incredibly tight. In fact, active projects are absorbing 60 to 80% of their available units before construction is even completed. This robust demand in the new development pipeline is being shaped by a flight to quality and the explosive growth of branded residences. While the total number of new project launches has moderated compared to the peak of 2022 and 2023, the scale and pricing of current projects are unprecedented. In the Central Business District alone, there are nearly 4,300 new condominium units under construction across 35 projects. So who is buying? A comprehensive analysis reveals that international buyers are the primary engine of this absorption. Over the 18-month period ending in mid-2025, international buyers purchased 49% of all new construction, pre-construction, and condo conversion sales. Latin American buyers account for a massive 86% of this global buyer pool, injecting $4.4 billion into South Florida residential real estate in 2025 alone, a 42% year-over-year increase. Despite the rising resale inventory, pricing in the luxury and pre-construction segments has remained incredibly resilient. In 2025, Miami's luxury condo market, representing properties over $1 million, crossed the $1,000 per square foot threshold for the first time, closing the year at a record median of $1,030 per square foot. During the first quarter of 2026, the luxury pre-construction segment posted 12 to 18% year-over-year price appreciation. Looking at specific neighborhoods, Brick Hill leads the pack with pre-construction pricing ranging from $1,200 to $1,500 per square foot, and year-over-year price growth of 14 to 18%. Miami Beach follows closely, with pricing between $1,100 and $1,600 per square foot. Sunny Isles Beach, Coconut Grove, Edgewater, and downtown Miami are all seeing strong pre-construction pricing and double-digit year-over-year growth. The defining characteristic of Miami's current development cycle is undoubtedly the dominance of branded residences. Projects like the St. Regis Brick Hill Residences, Cipriani Residences Miami, and Mercedes-Benz Places are redefining the market. These developments command premiums of 15 to 25% over unbranded products in the same neighborhoods. Buyers are demonstrating a clear preference for the lifestyle integration, service standards, and perceived resale liquidity associated with global hospitality and luxury brands. This trend is particularly pronounced in Brick Hill, which now features the highest concentration of branded residential inventory in the Western Hemisphere. The absorption success of these projects, often reaching 70% sold well before delivery, underscores the incredible depth of demand for ultra-luxury, amenitized living. Looking ahead through the rest of 2026, we expect the Miami condominium market to maintain this bifurcated nature. The resale market, particularly for older buildings facing increased HOA fees and structural inspection mandates, will likely see continued pricing pressure and extended days on market. Conversely, the pre-construction and new development sectors are projected to see continued appreciation of 8 to 14% annually. Several catalysts support this positive outlook for new development. First, wealth migration continues, with an influx of high-net-worth individuals and corporate relocations from high-tax states. Second, global events, like the anticipation of the 2026 FIFA World Cup, are already amplifying international buyer interest and short-term rental demand projections. Finally, supply constraints, including elevated construction costs and stricter lending requirements, are limiting new project launches. This effectively caps future supply and supports the valuations of projects currently underway. Your next chapter starts with one conversation. The South Florida real estate market moves fast, and so do we. If you have questions about what today's market means for your home, your investment, or your next purchase, don't wait. A private consultation can be arranged to discuss your specific needs. The LRF Group specializes in luxury residential and commercial real estate, estate sales, and distressed properties across Florida and New York. Reach out today and let us put over 25 years of proven expertise to work for you. The LRF Group is proudly affiliated with Berkshire Hathaway Home Services EWM Realty. Luxury is what we move. Remember, at the LRF Group, our services for your world. Thank you for listening.